Hey, good morning. Mass pattern report for Monday, April 30th. Dr. Bob Flower. How is everybody having a good weekend? I hope. Okay, so let's look at what happened last week. Nothing. Um, April 25th, we were anticipating that perhaps something international was going to occur. Um, Anything that occurred was typical, standard, and nothing of any uh, great immediate significance. So we're still on standby with this Iran issue here. Um, the Our call for Friday's Wednesday, the S&P, I believe it was Wednesday, was hit right on that day. When I say hit, it was up over 100 points. Um, and silver, the hit on silver came on Thursday. One day we had predicted Friday it would be a significant move, and it actually occurred on Thursday within one day of our call. And I think it was like 1.2% increase. Um, and oil seems to have hit a bottom, even though gas prices are coming down. And keep in mind, this is all because of the threat every time we look back over the past year or two. Every time Congress or a governor declares that they're going to look into the manipulation of the markets, these commodity markets, the prices start down for a bit, and then when the heat is off, right right to the moon again. So let's see how much they continue to drop here. Um, what I'm hearing is that that the gas thing is not really going to be a great issue, because what may well happen is if the gas prices stay at this level or continue up, sometime around September, or maybe even October, the president will release some of the reserves and knock the price right down, and make them look good and whatnot. So we don't know that that's going to be an issue unless he doesn't do it, and unless it really stymies people during the upcoming summer months, which it may well. A lot of industries, as we all know, tourist industries, vacation industries, are pretty well regulated by the amount of the prices on gas and oil. I met with one of our local congressmen, Congressman Elliot Engel, who now has a new district, which is not only the Bronx but Lower Westchester, and soundly gave him a piece of my mind as to why it's 6 months and nobody has contacted our offices relative to the program that we put forward with a group of economists and real estate experts for the resolution of the subprime mortgage mess. And very apologetic, in this. He wrote all kinds of notes and things like that, and he's going to have me down to Washington to discuss this with himself and some of his colleagues, and some of the congressmen on the subcommittee. So who knows? I may need you to build a fire under these guys, send them some emails, phone calls, what have you. Telling them to do what they can to get this issue done. Our program has been acknowledged by many, banking, real estate, as being one of the best programs for resolving the issue. And we're looking forward to being of service here, seeing what we can do help people who are in trouble, and to help the the banking sector and the Treasury in solving a problem. Um, I think that that what's happening these days with a lot of these office holders, especially on the state and in particular the federal level, is people are getting more and more interested. People are getting becoming more vocal about things and critical, and I think that they're recognizing that and looking to step up the pace here. I think the dialogue is such that they recognize that we have some serious concerns. It's not that the issues aren't serious. We've known that all along, and throughout history, there's always been something serious going on. It's that they are now starting to recognize that people are becoming more concerned, more involved, more in touch with things than before. And there's no one particular spectrum. Not independent voters, not only independent voters, not only seniors, but younger people as well. I think a lot of what we're hearing is a lot of the college age people who were so strongly behind Obama in his first term are still looking for jobs. So the glitter has come off of that star, and they're looking seriously at who or what's going to move their fortunes for them. And it's we're starting to see movement. One of the other concerns that a lot of people, especially in Washington, have is that if things stay the same as they are now politically, that is, if the House is Republican, the presidency is still Democrat, and the Senate is Democrat, we're in for gridlock just like we've had for the past couple of years. If the Senate goes Republican, which it seems like that's the direction, things may not have the gridlock that they had before, but it's still not going to be favorable towards resolving issues. Of course, the answer is that at this point in time, anyway, if the House, the Senate, and the presidency are all controlled by one party, then we're going to see some significant movement. Now, what direction that will be remains to be seen. There's still a lot of people who think that as bad as the administration has been over the past couple of years, that they still have the possibility of winning simply because of personality. He's got personality, folks. And that means a lot to some people. That means more than performance or capabilities, efficiencies, and whatnot. So it's worthwhile arguing about, because I think it's a very important argument. Okay, so let's move on to something else. But in any event, if you can, keep on trucking here. See if we can get your congressman, your senator, your local representatives to pay more attention to what you're saying and make yourself heard. And a little kick in the backside to them once in a while wouldn't hurt. And I think that moves them. They're beginning to lose a little bit of that arrogant swagger. So when they see people coming up to them who really, at this point in their lives, have nothing to lose, either because they made it or they're far from making it. They have nothing to no further downward movement to their daily lives, and telling them where to get off and what needs to be done here. So nature is kind of taking its course here. Okay, so I want to talk to you about some charting that we're doing, very interesting, and I want to talk to you just a little bit about potential, and something. But let's talk about potential first because it's going to lead us right into the charting. Okay. One of the principles in my discovery of the laws of potential that I've written about in actually all four of my books and my one pamphlet is the theorem of polarity, opposites, right? And we are definitely of the opinion that scientifically, mathematically, as well as astronomically, polarity is what holds things together. Even though that it's a form of separation, it's what holds things together on a higher level. So, given that, what we've attempted to do here is to graph some charts that use polarity, use opposite 90-degree opposite moves. Okay, and I have one here on silver that I'm just going to flash before you, and then we're going to put it up on the website because these things are not the easiest to chart. And if I can get my capable girl Janet here to take a look at this, and you'll see what we've done here is we have a series of charting lines that go from major lows to major highs. This happens to be silver throughout the past 6-8 months. And then we've drawn 90-degree angles at 50% of those moves and at 33% of those moves to see what we found. And what we found, and again, this is going to be up on our website, so you can take a better look at it, take your snapshots or what have you, whatever you wish. What has happened is that we've been able to indicate highs and lows off of those 50% and 33% moves to the point where that even the smallest degree of moves shows a range of high and low. And right now, what we're seeing with these patterns is that we're approaching a breakout here, and at the same time, and I know this sounds confusing, we're seeing a pattern of breakdown, which seems to be later, occurring later. All right, so breakout, breakdown, and I think that we may see that tomorrow, May 1st, and we may see that with the S&P as well. And keep in mind something else I wanted to tell you about this charting and about the stock moves. For those of you who have great interest in this, is every time one of these resistance points or support points are broken, it weakens that particular structure. For instance, the 13,000 level with the Dow, that thing must have been penetrated over the past month or 6 weeks. We counted, we had 14 or 15 times. That weakens 13,000 as a support and a resistance line, and I think you're starting to see now movements are going right through that like it wasn't even there, where before there was strong resistance and strong support. So what that means is we should now look for higher and lower resistance points, and with the S&P, we're going to be looking at resistance points down around that 1350, 54 level, somewhere in there, and on the upside 1444, 1445. I don't. The only thing I think that's going to move the Dow up is this talk about a new TARP situation that's beginning to develop. That Wall Street is pushing the Treasury like hell try and get them to put into effect, drive this market up. What's also happening is that the short players, the puts, while they're still considerable, they are not in the majority. There's the majority of puts and calls and volumes and interest is going more towards the upward motion of the market rather than the downward. But people are still concerned that there is something that's going to happen. Okay, and I think we all know that and recognize that. It's a question of what is it, how severe that's going to be, and when that's going to occur. And again, keeping in mind that being an election year, the politics is such that they're going to do whatever they can to keep things in focus. So and the dollar seems to be getting weaker again, and that unless it really breaks down big time, it's kind of going to take the commodities with them. You notice how all of the commodities are kind of weak right now, but I don't think that's going to last too much longer. But then it would appear that that we may well see much lower commodity prices towards this summer. We had talked about the market weakening sometime towards the end of April. We definitely think we're seeing that right now, and that perhaps somewhere around maybe a 500-point adjustment in the S&P, may if not more, may well be at play here. Okay, and we're going to see where that's taking us. I want to say hello to I believe is a special viewer, Mark Simone from WABC Radio, a good friend of mine. I was with Mark yesterday, and I know he's watching. And how are we doing, Mark? How are you doing? Terrific guy. And he really is fighting a good fight. I hope you all tune in to Mark on WABC Radio. He's a very funny guy, very witty guy, and smart guy too. Okay, so I think that's it for this broadcast. I'm going to try and do a chart for next week, and since so many people like silver, it'll be either be silver or the S&P. If I can, I'll do both to show how this 50% and 33% of opposites, major moves, can give us some more specific moves, weekly moves, so that we can kind of define better where we're going and help us all make some more money. Okay, folks, have a good one. Enjoy yourself. Be well.